So today we're actually talking about tax planning, and I have a long webinar already I already did one on Saturday. So if you want more details to what I talk about today and go back to Saturday, go to our YouTube channel, folks. Do you know how to get into our YouTube channel? Today's topic is 2021 tax planning. And it is it's a different year this year because there's many taxes, things that we are familiar with are changing, right? And the Biden's office had come up with this budget for the coming year. In order to meet the budget, they have to come up with the money, right? The budget is on the red, so they need to increase tax revenue to supplement the budget. To increase the tax revenue, they got to do something to get that done. So they made changes to our taxes. And those changes to our taxes, some are good for some people, some are bad for some people. So it is really good or bad is really irrelevant in terms of taxes. So I would never sit here goes, well, that's a very bad changes. No, because there was a reason why they make that changes. So what you really need to do is to understand what is changing and plan your taxes accordingly for 2021 to meet the demand for 2022. Okay, so one of the first one I want to mention to you, and which is related. There's a couple of things I want to mention to you. Number one, I want to mention to you about changes. So I'll tell you what are the changes. And number one, you need to know is the rate is increasing. So the rate increasing means that for the same $100 you make, you will pay more taxes if your total revenue is over a certain amount. Right now, they're talking about 400,000. Okay, it is not yet coming to the final version. The budget reconciliation is still going on. The people are still kind of, the House had the proposal. We're still waiting for Senate. Congress still need to approve it. And the president still have to sign into the law. So there's still process to go. It's late already, but it is the process they have to go through. And now what we know for sure is look at President Biden's proposal, you look at the House version, there are similarities. So that tells you where we go, and it's gonna land somewhere in between. Okay, after Senate give their talk, give their proposal, it's gonna land somewhere in between. So we are pretty certain for people who has higher AGI, and this 2021 is your year to work it, because in 2022 you will pay more taxes. That's the only way to get our country going without borrowing so much more. We already borrow a lot, so we're borrowing more, right? So that's number one. I want you to know the rate is changing. Number two, if you have a C corporation and you are facing a rate change as well, the C corporation, they're raising the rate from 21 to 28%. That's pretty much going to be done, because you look at Biden's proposal, you look at House's version, they're similar. Okay, Senate not going to come out with something reducing the rate. You know that for sure. So you're looking at increasing on the C corporation. That's number two. Number three, you're looking at S corporation changes. S corporation, remember, a lot of people has S corporation because K1 distribution, you don't pay self-employment tax, right? So you got that as an income tax. Now, the President Biden's proposal on the K1 is to have self-employment tax imposed on it. So that's President Biden's proposal to Congress. And the House came out with a version right now talking about still charging more, but 3.8%. So that is a tax gonna be put on K1 for S Corp. So now pose the question to you. Is it going to be worth it or not to have S corporation? Is this going to be what I do in 2022? And 2021, we still are the same. And the rule is going to be effective on January the 1st, 2022. But you got to know it now before you can move on to the new year, right? So that is another consideration you need to have. And this year, I know so well that there's so many business transactions, a lot of business transactions. You have people selling, you have people buying. Business transactions is all over the place. If you are a business owner, you were going to sell your business. I'm talking about the one who sell the business. If you're going to sell it either this year or next year, I want you to sell it this year. The reason, I'll tell you why, because there is a capital gain exemption for business owner who sold the business and made a bunch of capital gain. And there was an exemption that could apply to you, and it can reduce your taxes by literally 50% if you qualify. And there's sure, the qualification is a whole bunch, but I am talking to you. Most of you are small businesses. So most of you qualifies for that. And if you could reduce your gain by 50%, then you don't want to sell for next year that is getting reduced and changed, because that is also on the House proposal to change that, to limit, to eliminating and reducing the amount it's gonna be reduced. So this is another one that really related to small business. And of course, this part, the next one is if you sell for a loss. This is not related to the Congress and the President Biden's reform, but it's more related to you to know that if you have a loss when you sell your business, and I want you to not run away or not to say to your tax folks that, oh, I lost the money, so don't worry about this because I lost money, I don't pay taxes. You are so wrong, because in business, doesn't matter you make money or you lose money, it is a business transaction. Number one, you need to report that. Number two, reporting that might give you a big deduction that you did not expect to have. So I always tell my folks that in business, if you lose, don't worry. And sure, we don't want to lose. Nobody wants to go into the business to lose money. But if you did, know that it is better than completely write it off without any tax benefit. You can have tax benefit when you have a business loss. I just want you to keep that in mind. If you lose some money in business and you never got a benefit out of that, you didn't deduct it, and nobody told you you can, and you just lost it, and then you are doing something wrong. So let's make sure that in the year of change, I say that 2020 is hard. I'll tell you, all of my business people tells me that 2021 is harder. It is harder than 2020. So for that reason, there's a lot of changes. There's buy and sell and distress, and the people who have always filed taxes on time, always, and have always been the star performer for IRS, and this year would have fell short, would say, Ying, just, can't do it, couldn't put myself together. And we have seen a lot of that. So no one is alone in this struggle. We're just coming through a long dreaded, endless pandemic. So business suffers. Even if your business makes more money, you still suffer, because you suffer the growth that you cannot control, and you are losing control on your growth, and your customers complaining. It is just, no matter where you are, it is hard for the business. So with that, planning is so important, right? So I give you several reasons why you need to plan and why planning is important. So I need to kind of dial back to the beginning of our webinar. And first of all, I need to put out the disclaimer for you guys. Please make sure you take the information responsibly and take with grain of salt, and don't just believe whatever internet is saying. And a lot of people on the list here, I have never met you. And if I never met you, you listen to me, please check it out and making sure you are getting a reliable information. If you ever have any questions, send an email to us and we'll be here. We answer your question. Okay. And then the other things I want to let you know that I'm sitting on federally appointed committee called National Taxpayer Advisory Advocacy Panel. It is a panel that to advise IRS for serving our taxpayer more efficiently. And if you have any questions, things that you feel like IRS could improve, and I'm actually your grassroots connector to that big effort up in the White House. So hopefully I give my best shot. It's a volunteer position, but it's a big honor to be on that committee. And it's 3 years term. I'm already there for a year and a half, so I have another year and a half to go. And if you have any questions, take advantage of me. And if you have anything, and I will take that to the committee to get that process through, right? So that's that's my other things. And of course, I have a book on Amazon. You can check. That's called Appointment with Ying at 8 a.m. And I do plan to write 4 of these books, 8 a.m., 10 a.m., 2 p.m. and 6 p.m. 6 p.m. being retired from your business. And we write about the new retirement age and what people do. 2 p.m. buy and sell business. And on that 10 a.m. is the one I'm about to finish. That is to grow your business. And I actually have a chapter in there about COVID, but I could never get over with the COVID. So it's like I couldn't finish writing it. And I hope that would give you some ideas that growing business is one of the process. You can never call it ending. It is always there. And in business, I always say to people that you either grow or you fail. You don't have a middle ground. You cannot say that I'm so good. I stay right here and don't bother me. I just gonna make this money. I'm just gonna stay put. As soon as you do that, you fail. So it is almost a motion you have to go through and all the time on it in order you to save money and to be efficient with your taxes, be responsible for your fiscal affairs, and be responsible to your business, and be a good steward for your business, warrior for your business. So tax planning is your number 1 step. So now, going back to our content, we already talked about why we need to do tax planning in 2021. If I have never done tax planning in the past, why 2021 is the year? It is the year because 2022 is very different. Okay, now, and what else? I know you can ask me, okay, Ying, if I have a tax planning sessions with Community CPA, what are the stuff you guys are going through? And number 1, we need to understand your situation in tax. So normally, if you're already our client, we have your information with us. If you're not our client, you will have to bring all of your tax information of 2020, come to us. So we will lay it out and tell you and what you are short, what you need to do for the next year. So when we are talking about what can be improved, there's 3 areas we look at. Number 1, of course, it is your financial statement. In business, you have your financial statement coming out for every business. And if your financial statement is not done properly, it doesn't matter what the tax preparer do for you, folks. You are stuck with your financial statement. So I always tell folks that a good tax planning session can be guaranteed by a good set of financial statement. If your financial statement is not there, and then your tax planning not going to be accurate. So we want to make sure that your financial statement is there. So when you do tax planning with us, you bring your bookkeeper's financial statement to us. We would already point it out to you where and how this can be different. Because once that is done, and then we secure your data. So that is where the source data coming from. And we will use that data to estimate what you're going to have in 2021, come up with what we call estimated taxes for you. So our client who does tax planning service with us, they would pay their taxes before December 31st. We don't let them go to 2022 to pay for it. One of the reasons is the taxes you pay within the year, and it can be deducted by some of the state as the taxes paid for that year. But if you don't pay it in 2021, then of course you can deduct in 2022, but you waited for 12 months, didn't you? Right? So that's one of the reasons why we want taxes for 2021 to be paid in 2021. So that's our number one thing, to examine your physical data. Number two, we examine your structure. And the tax structure is so important. And I have a very famous example. I use it all the time because I was so proud of what I did, right? This is many, many years ago. And husband and wife in partnership, and has many, many hotels, okay? So the wife have never been to the hotel, never worked there, but the partnership came out with K1 for both of them. So I happen, they moved their account to us. We happen to ask them about their business. So I know the wife said that she never go to the hotel. She's a housewife and never really get involved with business. But I noticed that she was paying self-employment for that K1 she's getting. So I asked her, do you work in the hotel? No, I don't. Do you go to the hotel? No, I don't. And do you know anything about the hotel? No, I don't, because I don't care what my husband is doing. That's basically what the wife is position is within this business. So she actually qualified to be a passive investor, so she doesn't need to pay that 15.2% taxes. And I just want you to get a feel of how much that is. That is $60,000 saving for that couple every year. That is how important the tax structure is. You've got to understand whether you are in the right tax structure or not. So having said that, you want to come into tax planning session with Community CPA, and the question you need to have for whoever works the planning with you is my structure most optimal? And this year, one more thing, because once we know how the rules coming about, how the new tax code gonna be, so we may change our mind in terms of whether you're gonna be C Corp or you're gonna be S Corp. We may have to re-elect or dissolve your company, or reform a company, or elect a company, however we do it based on what's going to happen in 2022. Am I right? So we can still do the same thing for 2021, but you got to look out to 2022. And when you do tax planning, it is different from you doing financial planning work with your financial planner. That's why in our firm, we don't do financial planning work. You know how some of the tax people, and they also sell financial products. They also tell you to invest with them. And these people, I consider them, they probably just not good with tax planning, because the tax planners are different animals. People like me, I don't think 5 years down the road. How long is the president's term last, folks? Is that 4 years? That is the most you can think of for taxes. And most of them coming onto their job, they don't push out anything until a year later. So that reduces 1 more year, so that's 3 years. And so the most of the tax planning vision you can have is 3 years. Does that make sense? So with that, tax planning folks are short vision. We only look at today. So I always tell my client that if I have a way to save you $5 today, I'm not going to promise you that I'm going to make $10 for you if you just let go of this $5. Absolutely not. What I will do is, we got a $5 today, take it. This is what you got. And if next year is different, next year is different. Right? So now 2021 is a year that planning is important. That planning for what you do, we have a short vision, so we have 2022 in our head. We know what 2022 is going to be, as long as the Congress is going to pass the law, right? And so with that, you know, you need a structure review. Everybody needs a structure review. And then this is number one, is the physical data checking. Number two, structure review. You may ask me that, oh, Ying, what is number three? Then you already did these two, and am I done? No, you're not done. Because number three is to review all of the tax credit, all of the tax deduction. So folks, I want to ask all of you, if someone tells you that you can deduct $10,000, and then the other person says, and you get $10,000 tax credit, is that same thing? If you are running a business and I want to hear you say, no, that's not the same thing. If you are an individual tax filer, maybe it's not so critical to you because you're already getting those tax credit, child tax credit, earned income tax credit, you already have them. You're probably just kind of wondering, wow, nice, and the money come to me at the end of the year. But those are tax credit, means that if you pay, let's say you got $3,000 child tax credit. If you paid $3,000 taxes, they give you the $3,000 tax credit. And in the recent years, the last 5 years, the law changed. It used to be only refunding you. If you pay taxes, they give you the $3,000. But now recent year, they say, well, if you didn't pay $3,000, we still give you. So it's becoming a refundable one. So, you know, but that's tax credit. So 10,000 tax deduction is much smaller than $10,000 tax credit. So in business, depends on what business you are in, and we check all of our tax credit to make sure you qualify. And I'll give you an example. So one of our clients are actually in the construction business. So I just happened to hear the client talking about they hired a couple folks who just got released from prison. So they hired a couple of them because these people were looking for a job. They're connected with a nonprofit organization, so they hired them. Do you know that you can get tax credit for those? So let's say if you pay that person $3,000 a month on salary, and you at least can get $1,200 tax credit back, which means you probably can write off about $12,000 expenses with hiring that one person. So those are things that people need to be aware of. Business people need to be sensitive to. You know, there is another Biden's proposal requires small business to provide retirement plan for employees. Okay, if you have more than 5 employees, you are required to do it. If you don't do it, you will be penalized for $18,500 a year. Okay, I'm making this statement really short because I already did the calculation. I knew what they're talking about. It's not becoming the law yet because it didn't pass Congress yet, but it's a proposal. It's a proposal. So if you hire more than 5 people, you must offer those plans. And do you know that if you offer those plans and you set up those plans, those costs for you setting up the plan actually can be a tax credit that you take. And how many times have you ever hear people talking about that to you? Maybe not, because a lot of people don't know. So in our tax planning process, those tax credit will be listed. We have a checklist. We go through that to make sure we ask you the question and we know your business. So we know that exactly what credit you would be qualifying. If we think you qualify, we will go into detail to figure out how much is that, right? So those are the things we go through on the tax planning. And it is really a established signature process within Community CPA. So I don't mean that you have to come over here to do that. I want you to do that on your own if you don't come around, because this channel is completely made for our community members. We have no other purposes but making sure each one of you have that knowledge to call. When you talk to someone, you literally know exactly what you're asking. Even if you call up to KPMG and you want to engage them to do your business accounting, and you ask them, so what are the tax credits do in my business? I would probably qualify. Could you give me a list of that? And you ask them, is my tax structure optimal based on Biden's proposal or based on what happened right now? And you will ask them, is my financial statement really make sense to you? Is there anything you see that I should make changes to? Those are good questions to ask. Then you will run your business properly. Then you will be able to save taxes. We're talking about, I always tell my client that there is no way you want to do your tax wrong, because that's not the way to go for legacy. You know, everyone, when we do things in our life, don't we want to leave things positively and gainfully for our next generation, right? For your children, for my children, for people who rely on us, or even for your spouse, or maybe even for your puppies, you know, anything, anybody you love. And that is the purpose for our life, isn't it? I would say that's my purpose. And I don't really, ever since I am able to make a phone call on the payphone with 25 cents, I am satisfied. I had those days in my life, I don't have that 25 cents to make a cell phone call. Okay. So those days are gone. I am satisfied. That was the promise I made to God. And I will never ask for more. If I have money, whenever I wanted to make a phone call, I have that money. So that's what I wanted. So with that said, the next goal is really to make sure that you work your business and be able to leave that legacy. Doing it wrong will never get you there, but doing it smartly and correctly and taking advantage of all the rules and regulations that have made for encouraging small businesses to go forward. And that is the way to do business. So planning is in line with that. You cannot get there without planning. So this is where I want to leave that thought with you. We have only 30 minutes and I'm using up all my time here. And I want to leave that thought with you. And what is the best way for you to pay less taxes, but pay it right? To get your business growing, but growing it under the sunshine. And there is nothing need to be something unspoken. And I always tell my folks that it is really important for you to feel that energy in you. Because if you ever feel like you have to cut the corners and hide pieces in order to go forward, wrong feeling, that energy not going to get you anywhere. So to get the energy correctly sitting in your heart, to get your business growing properly in year 2022, and to wrap up your year with peace in mind, start with tax planning. That is what I want you to learn from this session. Didn't even use my PowerPoint. What's the point, right? Our point is so simple, one slide. Do it right, do it smart. That's what you do. All right, and our phone number here, our main number is actually 515-288-3188. You can call our main number. Our 3 locations all ringing at the same time. So people will pick up your call. And you can also email Catherine, and Kat, put on your email on the screen, and email her for anything that you like us to assist you. And we will, tax planning season is a very busy time for us. So we want to make sure that if you are interested in engaging Community CPA for this work, and sign up early, don't wait till the last minute. And the most effective tax planning need to be done before December 31st, 2021. All right, I'll talk to all of you again on Saturday. Bye-bye.